Welcome to Stocks to Watch, our exclusive one on one series with executives to help you make informed investment decisions. I'm Ashley Berry, and John Fennick, portfolio manager and president of Fennick Consulting, is with us. John helps small and mid cap companies raise awareness about their brand, as well as provide strategic education about opportunities and risks in the financial markets and specifically in the commodities markets. Really looking forward to hearing your insights and recommendations, John. Welcome to the show.
Thanks, Ashley. Good to see you again.
Always a pleasure. So let's begin with uranium prices. They've been on the rise for years and attributed to several governments' ambitions and their nuclear power generation plans. However, some experts predict that this rise is not quite sustainable. What are your thoughts on that?
I actually went to a uranium night in Vancouver when they had the VRIC conference up there in January and met probably seven CEOs in the uranium space over a 2 hour period. And in getting the sense then when spot was breaking above 100, there was a lot of excitement because this has only happened one other time in history where we were over that $100 spot price level, and that was back in 2011. And we all know how that kind of ended. So it's been a long run for prices to get back to 100 plus. And the interesting dynamic last year for me was that spot was running hot, and the uranium stocks weren't doing that much unless you were like Cameco and some of the larger names in the ETFs. The little guys, even some of the mid caps, didn't move much at all. I mean, spot was up significantly last year as a commodity, probably one of the best, if not number one, number two in the commodity complex in terms of performance. But the actual equities, which you expect to outperform any spot price, right? Because you're taking more risk in stocks than you would by buying any commodity, just didn't do very well. So it was interesting to hear from those CEOs about what they think for 2024. A lot of them have drill programs set up, and I think it's going to be a great year for uranium. I think the worst is behind that subsector in the commodity world.
Yeah, and just to dovetail on that, do you think the higher prices will actually help bring several exploration projects online? Maybe you could highlight some of your favorite uranium stocks.
Sure, yeah. So we, as value managers, aren't going to chase a Cameco that's already up, 200% in a year or something. We're going to go after things that people aren't familiar with because we believe in that, the tide lifts all ships kind of, value oriented approach. And we're going to get there. We're just not there yet. So this is the time to do the homework. I think exploration companies will have a long path. I mean, I'm not trying to tell investors that this is going to be something that they'll see, production from necessarily in 1 to 3 years. You have to be patient. Uranium production is just starting to ramp up in a lot of parts of the world, right? So it's one of those subsectors where you can't really flip a switch and start these projects up easily. It takes time. But that said, we spend most of our time in the small and micro cap space, and Forum Energy is our number one holding currently, which is FDCFF in the States. I'll just give your listeners the US ticker. It's a very low price stock right now. Justin Hune, who's the uranium insider with I think about 4,000 paid subs, got out of the stock probably 2 to 3 years ago, and it really hurt the share price. And the share price didn't come back because when you have 4,000 people paying for you to give them some guidance, and they get out in mass, it destroys the chart, right? And so it went from 47 cents to 11 cents in I think 2 months.
Wow.
And that's just the power of influencers out there. But also as a value manager, we look at that and say, was that anything that Forum did, right? No, the answer is absolutely not. It's just someone who decided they were going in a different direction, and that's a great buy. So we started our position at 11 on the nose. We bought more at 14, and then we bought a triple position last August and September at 4 cents, 5 cents. And the stock had good news in September and ran to 15 and a half cents. So that just shows people that, we're not always correct on our first or even second entry,
Mhm.
but then we're going to keep in touch with that company if we like the company, and we're going to get it right eventually. And then we're going to add more at lower prices so that our average cost is quite good. And so now our average cost being around 7 cents, stocks at 9, and we're making money, right? Like how people have to view the junior market. Another name that we just had lunch with about a month ago was F3 Uranium, FUUFF. And this is a company that has 17 projects, most of which are in the Athabasca, which is the number one jurisdiction in Canada for uranium projects. And a very experienced management team. They had some great drill results in January, February, and last year. So a stock like that is very attractive to us. It's pulled back from 42 to 30 cents on the nose. You're going to get pullbacks in any rally, right? And if you believe in the price of uranium doing well, if you believe in uranium stocks following that, then you have to buy dips in an up market. Two other names would be Strathmore Plus Uranium. They're 100% in Wyoming with their three projects. We love Wyoming as a district. I don't think it gets enough credit. I have a gold company that we may be able to talk about later that is trying to permit right now in Wyoming. So I've actually met a lot of politicians in Wyoming. I understand what the positives and negatives are with that jurisdiction. And let's face it, it's in the US. I mean, it's not in the Congo. So, when you look at the world, you have to think geopolitical risk first, almost now, even more so than management sometimes, because even if a manager is really good, if you're in a part of the world like Panama or the Congo or someplace that's just not, friendly to mining, then you're in trouble. The other name would be Standard Uranium, which is another one that has a lot of projects. I like spreading my risk. So this company has 11 projects, all in the Athabasca, yes. So you're taking some jurisdictional risk, but as I said, Athabasca Basin is like the number one place to really be if you're a uranium player. And I think John Bay is a really good leader there, and we'll get it done.
Yeah, some really good points. I really like how you mentioned the power of influencers. And also, it really, to me, sounds like patience is key. And, you mentioned gold, you mentioned Wyoming, wonderful state here in the US. And,
Yeah,
and the price of gold is soared, reaching
right.
about 2,200 per ounce. I believe the same scenario could apply to gold exploration companies as their economics become healthier. So, what's your outlook now on the gold market? And are there any companies you find particularly attractive in that space?
Yeah, sure. We think gold at 2,200, a little below that right now, is perfectly positioned. I mean, just to give your listeners some perspective, we were calling last January for 1790 to 1800 to hold. That held. We then saw right before October 7th, when Israel got invaded, that week it hit 1825-ish right before that, and then it just took off again, formed a higher floor because of the geopolitical risk that we saw. And now you're seeing concerns about the US election. You're seeing concerns about all sorts of things that weren't even 2023 issues. So gold is now putting, I think, another floor in here at maybe 2000. I mean, it's not to say that we wouldn't get into the 1900s again, but I mean, when you look at the price action last year, Ashley, it was 1900 for, I think, over 125 consecutive days. I mean, it's like, so people that are like naysayers on gold, I don't think they're really looking at what I'm looking at in terms of charts. This commodity has done very well for quite some time. It's that the disconnect between gold equities and the price of gold has been frustrating people like me and investors for like 3 years now.
Mhm.
So there's never been this kind of a disconnect in history going back to the 70s when you have gold equities trading so low versus the price of gold, because gold's at an all-time high. It's like pennies off an all-time high, right? So we love companies like the one I was referencing, US Gold. US Gold is USAU. They're on the NASDAQ. They've got a lot of liquidity. They've got good leadership. George B has been building mines all over the world. So when you talk to a guy like that and say, hey, what would be the problems with building in Wyoming? He's like, I get to go home every night. All my workers get to go home. They're really close to Cheyenne,
Mm.
which is really close to Denver Airport. I mean, you've got infrastructure there, right? They're right near the highway. So like it's just one of those stocks with a great name trading on a great exchange with I think 10.2 million shares outstanding. Very tight float, we call that. Very, very good capital structure. So that's also important, right? Because they've done a good job of not issuing a ton of shares over the years. And so therefore, as investors, when a stock really moves like that, you have a better chance of success because when you look at who's owning the stock, right? It's management, but it's also the board. It's large investors like myself that are not selling here at $3.68. We want,
Mhm.
a 5, 7, $10 price before we get interested in selling anything. Um, I also like, backdoor plays on gold. So another company I just met with last week in Toronto called Guanajuato Silver is in Guanajuato, Mexico. So they have 4 projects in Mexico. They're known for silver. They're producing about 900,000 ounces per quarter. But then when you look at how their distribution of metal is in terms of where they're deriving, possible revenues, gold is representing 40% of their base now as of December 31st. So it's actually like as much of a gold play as it is a silver play, is my point. But the stock is trading at 14 cents, and the 5-year low is 11 cents, right? So you're not
Mm.
buying something here that has already run up. I mean, this stock really responded last year when we had the financial crisis in March. It ran up from, I'm just going to guess here, I'm not looking at a chart, but it's around, it was up about 90% in a month. And that was just on the back of being oversold. So I think we've reached that oversold condition here again at 14 cents, where people are just, throwing in the towel on some of these silver and gold names. And this is the time where you have to do some homework and just, sift through the rubble, if you will. That ticker is GSVRF.
Yeah, great advice. Great advice. Do your homework always. I know we spoke about that in one of our previous interviews. When it comes to investing in exploration and mining companies, John, do you prefer established large mining companies or junior exploration companies, and why specifically?
I'm one of the rare people in the influencer slash newsletter writer community that will focus on everything. I am agnostic to cap size. I will look at a Newmont here when I was very vocal on 2 different interviews like this. The last week of February, when an analyst on that Monday downgraded Newmont in the 29 range, and I'm like, this has got to be the closest thing to a low that we're going to see. I mean, this is like the number one holding in GDX. GDX is the largest ETF in the mining space. It's got over $10 billion in it. So, I mean, where was this person, 3, 6, 9 months ago, right? Like, this is just when you get to that point where people are starting to stretch, you're close to a low. So I love Newmont here. We own some Agnico Eagle, which is the third largest holding in GDX AEM, really well run, beat by 8 cents this quarter. So, one of the things I'm seeing, Ashley, which is encouraging for gold investors, is that these companies on the large cap side are starting to beat on earnings and on revenues. So basically, Agnico beat by 8, Newmont NEM beat by 4, and Barrick, the number 2 play, beat by 6 cents. So, that's encouraging, because that's 31% of GDX. It's actually, like a third of the entire ETF. So we see these kind of opportunities as positive as well. And we use kind of that barbell strategy where we'll buy large caps, mid caps, but we spend a lot of our times in small caps right now because many of them are trading like they're going bankrupt. And that's just not the case. If you actually talk to the CEOs, get an idea of what they're doing, what I see is that they're trying to just stay alive, in a year like last year,
Mhm.
to fight for, again, in a better situation like now, right? So going back to the U.S. gold situation, right? They are going to get their permits in Wyoming, I think, within 6 to 8 weeks. I mean, that's what the CEO has been telegraphing on multiple interviews. So once you get your permits, now people think you're real, right? Because like
Yeah.
permitting anywhere is not easy in mining these days. So Wyoming has not been I wouldn't say they're against mining. I would just say that they haven't issued a ton of permits in the past outside of like the uranium space. So I think George is going to get it done, and then people will start circling the company, right? And as someone who owns a lot of shares, I'm not interested in a takeout for 30 or 40%. That's not where we're investing in the company. We want to see the mine built. So that would probably take, 2.5 years or something from the permit. But still, like in a hot gold and copper market, which is the two, minerals they're trying to find, that stock is worth a heck of a lot more at higher prices. So
Yeah, permitting is paramount. There's all these questions. Is this real? That's really the main question. So, like you said, once you get the permits, then you can really start to believe in that. You also mentioned current events and having an impact. I think it's interesting, we talk about the global impact as well, things going on globally, moving on now to the copper commodity specifically, seeing a slowdown in China. How should investors manage the risks that emerge from that?
Yeah, so we don't own Chinese stocks as a whole, like long right now. I mean, because there has been some negative news there with regards to real estate and some other concerns. There's always accounting concerns, as far as I'm concerned. But I think China. Here's the thing with copper, as you mentioned, you don't need to have China do extremely well. Like that's the thing that people don't understand is that I hear this all the time in the media where, well, if China doesn't do well, copper's done. That's not the case. Yes, they are a huge consumer of copper, right? But other parts of the world need copper now. Like when you look at the electric, vehicle market, it's huge. It's a huge part of the battery. It's a huge part of electrification in the world. So it's not just about China doing well. I think you're seeing copper take off now. It just broke out yesterday. If you look at CPER, that's the ETF that tracks copper most closely, I'd say, and it broke out of a long base and looks really good. So now that you're over $4 a pound in copper, you could make a test of that all-time high, I think, easily within 12 months. And so that's why we're buying copper juniors right now that are just thrown out the window. I mean, copper juniors have really been trashed because if you remember, copper was out of favor for a long, long time, and then it ran up starting around 2020 when COVID hit. And it really ran from 2020 to 2022, had a nice long run, made another all-time high, but then faded real hard. And so that's the most confusing commodity, I think, for 2023 was like everyone, including Goldman Sachs, was calling for higher prices. We never got there. Actually finished down for the year as a commodity, and yet everyone talks about how much copper we need. So we're looking at little names like VR Resources, VRRCF. They're going to drill their new Boston project, which is in Nevada, great jurisdiction, number one in the world, actually, right by the highway. So, good infrastructure. Mike Gunning's been in mining for 30 years. So, one of the things that we do look for alongside of jurisdictional risk is management. And so, Mike's a PhD. He knows what he has to do. He's very conservative with his cash. I love to see that, in management. It's just a lot of these companies actually just need cash. And I think one of the good things that we're going to see over the next 24 months is private equity and hedge funds starting to get into the mining space. As the broad market gets less interesting to them, they will rotate into our space slowly, albeit, but I think I'm already seeing it. I mean, I'm already seeing like 3 entities, 4 entities that I've had relationships with ask me more buying questions about gold and silver and copper because they see the value there.
Hmm. Fantastic. So, opening up the aperture, looking to 2024, we only have what, 8 months left now. What are your top stock picks?
Well, I've mentioned a few today. I would say, let me think about this for a minute. I look all over the commodity complex for different ideas. So one that I started to track about a year and a half ago is called First Tellurium. I may have mentioned that on your show last time. They had some fantastic news in February that completely got overlooked by the market regarding thermoelectric, work. And again, it's very high level stuff, so it may just not be easily picked up on by the investor community. But when you read the comments from Don Freshy, who is, I believe he's the CEO of Phoenix, or he's definitely on the management team there, bigger company saying, "Holy cow, this technology is really amazing." And then talking to the CEO, Ty, who runs First Tellurium, he's like, yeah, we could replace alternators in cars eventually with something like this. Like that's disruptive, right? And so we look for things like that where, okay, let's take a look at the research. How many companies are in Tellurium? None. Like there's no juniors out there you can buy in the US or Canada except for this one. And it's trading at 5 cents. So, back in the 90s, I made a lot of money in tech looking at what's the component of an iPhone. And I had some nerdy friend of mine tell me, oh, you should buy this company because it's going to, probably get bought out by Apple eventually. And sure enough, it did, and it's like these little companies really can give you huge upside. I know that it sounds crazy to some of your listeners to look at a 5-cent stock. I totally get it. But you have to spend 5, 10 minutes of your life and make a phone call to this guy and say, what do you like about this? Why is the market overlooking it? It's because the market is looking at Bitcoin making an all-time high, the Nasdaq making an all-time high. There's so many distractions in that in real estate right now. That's my theory, that people aren't looking at stuff that's in the deep, deep value space that is going to be fine over time. So that's one that we, have put some capital into. Again, I'd say one that I think longer term is Stillwater Critical, which is PGEZF. PGEZF is just attached to a major in Montana. So again, the major that it's attached to is a very conservative company. They're not the kind of company that will just buy you because you're right near their mine. But eventually, wouldn't it make sense for them to buy something like that where they already know the geology? They're literally attached to each other. I mean, it just makes sense to me. But it was interesting last June that they got a 9.9% investment from Glencore. So Glencore is top three player in the world for commodities.
Mm.
Now, if Glencore throws their hat in the ring and wants to bid up Stillwater, Neil over at Sibanye Stillwater is going to have to deal with that, right? And have to bid on it himself if he wants it. So I love to see those kind of situations transpire where, Sibanye is real conservative. They haven't put a bid on the property. That's fine. Someone else has now found it to be valuable, and they're a huge player, right? So you have to give that some cred. And again, 10-cent stock in Montana, no problems with the locals. They're making good advancements with everyone. And I think they're going to put out drill results in a few weeks. So it's just, again, just a great opportunity, I think.
Yeah, and I appreciate the advice that you give about, don't be scared to invest in a 5-cent stock. You never know. Plus, you touched on the innovative work that companies are doing. Aside from doing your homework, John, do you have any last tips you can offer for young investors?
Yeah, sure. So you shouldn't have all your money or even half your money in some of these names I just mentioned. This is extremely high risk. Um, you should have a portion of that money that you have. If you have $100,000 nest egg, you have to decide what your risk tolerance is. I don't know you personally, right? So like you have to say, okay, maybe if my account loses 10%, I'm really going to be worried. You shouldn't have any of the stocks I talked about today because these things are volatile. But if you had talked to me 2 years ago, I was talking up like Newmont and bigger cap stuff. I wasn't really in the junior market like this.
Mm.
So I don't want to give your listeners an impression that I'm just focused on these super small stocks. I think that when you look at a 3 or 5 year chart on any of the names I just gave your listeners, you'll see what I'm talking about. These things were 80 to 90% higher 3 years ago, 3 years ago. It's unbelievable because they've just been decimated. And so as a value manager, you have to rotate your what you're focusing on. And so that's kind of where we're at. About a year and a half ago, we spent a lot of time around, yeah, it was about a year and a half ago, just looking at these stocks and saying, I need to make some phone calls to these CEOs and really get a better understanding of if they can survive. And if they can, there's tremendous upside. So that's one of the things that I would leave with your listeners is if you can't make the calls yourself or you're not getting a response, then you need to partner with someone like myself who can get that information to you. So we have a newsletter, that would be helpful to some clients. It's only $65 a month that when I come back from a big conference like in Toronto last week, I'm writing up 6 or 7 of those stocks in the newsletter to give my listeners and my followers an understanding of why I see the value in some of the names we talked about today. And then my next issue will be another 7 or 10 names because I couldn't get it all done in one issue. But I think something like that is a good place to start. And I'd also give some recommendation to listeners about not following like 10 guys like me. You have to follow like 2 or 3. You're going to get totally confused. You need to focus on people that are telling it straight and that have a good track record. So go to my website, fennickconsulting.com, check out the performance tab and put it up against anything out there. We're very proud of what we achieved.
Fantastic. You took the words right out of my mouth. I was going to say, John, where do they go to get more information? Appreciate it. As always, always provide such great insights. John Fennick, portfolio manager and president of Fennick Consulting. Thank you again for your time, for joining us here on Stocks to Watch. And we look forward to hearing more from you in the near future.
Thanks a lot, Ashley.